we look around the world, the mutual funds around the U.S. are domestic, and that's where we look. And we don't have a lot of exposure to the global guys right now because, you know, in terms of the small and mid-cap banks, the M&A cycle is really very, very strong.
I remember a number of years ago, you came on this fine network and you said, Brian, there's a company out there called Yandex or whatever. And I was
Yadkin.
like, Yadkin Financial. And I was like, Yadkin Financial? Who's that? It was a North Carolina bank. You talked them up. They got bought.
Yep.
I'm sure you and your clients did very well
We did.
on Yadkin. Now you're coming out and saying, Brian, I think I may have found another Yadkin.
I think I did.
Who is Veritex?
Veritex.
Doesn't sound like a bank.
You know, they make up all these great names, but some consultant probably came up with that. But at the end of the day, the interesting link there is the CFO to be of Veritex is a former CFO of Yadkin. You've got a company with assets in Dallas, assets in Houston. You've got in-migration. Both economies are doing great. The resultant merger between Greenbank and Yadkin is an $8 billion company. And I think they're capitalists. I think the merger assumptions were very conservative. I think they'll exceed on earnings estimates.
They're in a hot market. This is a Dallas and Houston-based bank. I mean, one of the fastest-growing economies in the United States.
And one company offers capital markets. So Greenbank does capital markets. So they'll be able to do that in Dallas now with Veritex. And Veritex has a mortgage business they'll be able to do in Houston. I mean, both booming markets. So I think revenue assumptions are going to be better. Cost cuts will be better. And I think at the end of the day, if somebody offers them too much to refuse to sell the company, I think that's there too. So
there are thousands of regional, small, mid-cap regional banks in the United States. Many have said, you have said, there's simply too many. Do you believe this is going to be the beginning, or Yadkin was the beginning of a bigger M&A cycle, Anton?
Well, the M&A cycle is clearly bigger percentage-wise. We've seen between 4 and 6% of every bank every year sell in the last 5 years. So you think about that kind of volume, it's big. You know, you're seeing bigger headline deals. We haven't seen the smartest deals. The smaller banks are doing smart deals. The bigger banks, Fifth Third did a deal. People didn't like that. The math wasn't as great. We just saw Synovus do a deal in Florida. Again, big headline, big deal. All the shareholders of Synovus were hoping they'd sell. So stock got hit. But we need smart mergers, and we need ones that create value.